In this video, we are going to talk about becoming a millionaire with stocks. So before starting, please like this video and subscribe to How to Make Money Top 10 Videos channel and ring the bell for our future updates. Investing in companies on the stock exchange is usually marketed as a method to create genuine wealth for yourself, as well as future generations of your family. But given the volatility of the stock market, how do people become wealthy from stock? Many people desire to be millionaires, but only a few are successful. The good news is that even the most inexperienced investor can become a profitable investment. Being affluent in the stock market may appear to be a privilege reserved for Wall Street, insiders, or wealthy investors. To make a lot of money, you don't have to be wealthy or know a lot about investing. You will, however, need a strategy, and taking these 3 actions will put you on the path to becoming a multimillionaire. Time is your friend when it comes to making money in the stock market. Investing is a long-term game, and there is no quick method to becoming wealthy. The more time you have to invest, the more money you could make. Depending on your age, you may need to set aside a substantial sum of money each month to attain your goal. However, the longer you pull off investing, the more difficult it will be to become a millionaire. Assume you're 30 years old and have just started investing. If you put $600 each month and achieve a 10% annual return, you'll have over $2 million in 35 years. However, if you didn't start saving until you were 35 and only had 30 years to save, you'd need to invest around $1,000 every month to reach $2 million. If you get a late start, it may be more difficult to become a multimillionaire. It is nevertheless more wiser to start investing now than later. Choosing the right assets is crucial if you want to make the maximum money, but the process of purchasing stocks can appear contradictory. While it is possible to make a lot of money by investing in the next big thing, such a shiny new startup that promises to change the world, slow but steady investments usually yield higher returns. Many investors might benefit from investing in an S&P 500 index fund. These funds follow the S&P 500, which is made up of a little more than 500 equities from some of the country's largest firms. Since its inception, the S&P 500 has averaged a 10% annual return. Furthermore, these funds are among the safest investing option available. The S&P 500 has seen its fair share of corrections and crashes over the years, but it has always rebounded. The stock market will certainly fall at some time throughout your investing career. Market corrections, while normal and beneficial, can be terrifying. If you're terrified of losing money, it's tempting to try timing the market. However, this might sometimes do more harm than benefit. Market timing means selling your investment at a high point and then buying them again at a low point. In theory, this appears to be a good idea. In reality, however, this strategy is incredibly difficult to apply. The stock market is turbulent and even experts are unsure how it will react. Take, for example, the 2020 market catastrophe. Not only was the crash surprising, but so was the near instantaneous comeback. And if you try to play the market but end up buying and selling at the wrong periods, you may lose a lot of money, making your goal of becoming a multimillionaire much more difficult to achieve. It's better to ride out the storm than to try to time the market. If you put your money in the right places, your investments should eventually recover. Making a multimillionaire on the stock market is challenging, but not impossible. It's easier than you think to make money through investing if you start as soon as possible and build a strategy. Number 1. Understand the stock market and stay focused. If you want to grow your money in the stock market, you must have a working knowledge of the market and be comfortable with long-term investing. Few people become millionaires overnight as a consequence of a lucky stock pick, so don't hold your breath waiting for it to happen to you. If you need help getting started, you can speak with a financial advisor. The Paladin Registry, for example, is a platform that connects investors with fiduciary certified advisors. That means they're required to act in your best interest. Maintain your focus on your investment goals and be calm during downturns. Allow the market to perform the grunt work for you. Budget for investing. A great investing method is to budget your earnings. Investing contributions should be accounted for in your monthly budget so that you can track your progress over time. Look for ways to save money so that you can put more money into your investment. Regardless of how much you have already invested, cutting back on other expenses may allow you to invest even more. It's not a bad idea to get help organizing your funds. Facet Wealth is a financial planning firm that pairs you with a certified financial planner, PM, to handle your investments, savings, and other financial problems. Use index funds. It's a tad optimistic to hope to get wealthy by investing in just one stock. This is why index funds have grown in popularity. When you buy an index fund, you diversify your portfolio because you are investing in a range of companies in one fund. Your investment in each fund is essentially smaller. As a result, you are paid less by each company. However, in some of the companies fall, you will not lose as much money. Investing in index funds is suited for the buy and hold strategy and building wealth in the stock market over time, rather than seeking for the one stock that will change your life forever. Number 4. Buy and hold. The Apple example clearly shows how owning and holding a stock may be quite beneficial to your financial status. The practice of purchasing stock shares and holding them for a long term, even when the stock market is down, is known as buy and hold. The buy and hold approach is lauded by the world's most prominent investors. Money is made in investments by investing in and owning good companies for long periods of time, Warren Buffett said in 2016. Number 5. Short selling. It is the inverse of the buy and hold strategy. People who intend to make money in the stock market in a short period of time short shares. The main idea is to borrow stocks and then sell them at current market prices in exchange for cash. However, because you borrowed the stocks, you must replace the one you sold. You are also obligated to pay dividends for the time you borrowed the shares. Short sellers anticipate a significant drop in the stock price so that they can repurchase it at a reduced cost. This suggests that they will be able to take the difference with them. Short selling is a profitable strategy in the stock market, since the difference can be rather big at times. Shorting the market involves market knowledge as well as an informed guess as to when stocks will collapse. You don't want to borrow them for a long time, since you wind up owing a lot of money in dividends. If you're interested in short selling, you can buy and sell stocks through a brokerage firm like E-Trade. Number 6. Contribute to your portfolio consistently. Consistently investing to your assets over time is an excellent approach to accumulate wealth in the stock market. It's a cost-effective technique for the average American. Many people do not have huge sums of money to invest at any particular time, but they do have smaller sums to contribute over time. Consistency in investing is a sensible financial strategy. Assume you begin with a $3,000 investment. If you invest $500 every month for 30 years at a rate of 6%, you will have $523,022 in your bank account. You'd have $1,027,897 if you paid $1,000 per month for 30 years. If you're just beginning started, you can use a calculator like this to learn how different levels of monthly contributions affect your investment performance, or you can utilize an automated investing program like Betterment. For those with a bit more experience, personal capital is a fantastic option. Not only does it keep track of all your finances in one place, but it also provides superior wealth management. Know the math behind getting rich in the stock market. In 1980, Apple's initial public offering, IPO, price was $22 per share. If you had invested $5,000 and held it until August 2018, the share price would have climbed to $227.63 per share, a gain of more than tenfold. But more importantly, the stock split 56 times at the time. You could have bought 227 shares for $5,000 in 1980 after the corporation has divided its stock and changed its business plan a few times. You'd have 12,712 shares in Apple by 2018 at $227.63 per share. Your $5,000 investment would have grown to $2,893,632.56. That is how you profit from the stock market. Extremely affluent. Long-term investing like that would have made you a multimillionaire from just one company over a 38-year period. So how can one generate that much money in the stock market? While there is no one-size-fits-all answer, there are a few things to think about. I hope you enjoyed our video. Please let us know in the comments area below. Thank you for being with us. Please like, subscribe, and turn on the notification bell before leaving. Thank you for watching How to Make Money Top 10 video channel.